This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back. This is Joe Rabil with the Stock Market Update. So I've been keying on one specific moving average that we've wanted to watch and look at the slope of, and it just hasn't been able to give us a confirming signal. I do want to talk about MACD and ADX today pretty in depth, especially on the daily time frame, because there are some developments that are taking place that have me thinking the possibility is that maybe we're not going to pull back. We've just gone sideways and maybe continue to go sideways in the near term. But let's take a hard look at the market conditions first. Let's get going on that. If you want to learn more about multiple time frame trading, I suggest taking a hard look at the book. It's on rabilstockresearch.com/book. And I'm offering at a discount right now in a PDF format. We'll start out with the sentiment, the bulls minus the bears from Investors Intelligence. It has dropped this week from 48% down to 44%. So not much of a change, but the bulls dropped off based on the pullback that we saw. It was a minor pullback. So that's a pretty, it's still up in that danger zone. So I still have it categorized as negative, but it is kind of a decent drop considering the market didn't really fall that much. And then the OBOS is still up. It's actually dropped to 70. This should be updated to 70. It was late in the day where that dropped off. So, but I'd still categorize it as negative. And I'm going to go into a little bit about the RSIs in a minute. And then when we look at the volatility, the daily is negative. It has definitely jumped up here. Weekly has not changed. And the only negative of the trend and momentum for the three time frames is the dailies continues to be negative, but it's getting closer and closer to where I'd put it back to neutral at a minimum. And potentially it could actually turn positive without a whole lot of effort. But we need a little bit of time. I'll go into that as well. All right. So let's just look at the notice the 18s. I've got all the 18s lined up here. So this is the quarterly 18 in red, and then the monthly, and then the weekly here, right? And on this chart, we've got the same colors, but this is the 18 day. So we've got them all lined up. They're all rising, right? You got to have a positive bias when all three of these lines are rising. Now, yeah, there is some risk here because these are getting prices stretched away from the 18, and the 18 is stretched away from the monthly. These aren't exactly close together, but I wouldn't call them stretched. So I'm still inclined to believe, based on the slope of all these lines, that there is support, underlying support. But look at what's going on with the volatility. Volatility hitting another new high here. So we had a minor reprieve here as this tried to consolidate a little bit during this period, and it dropped it off. But now we're back up. So I think the risk is still elevated based on that. But look at what's going on with the RSI. Actually, let's just look at the 20 ATR here. We're still dropping. We ran up and hit the moving average and have continued to go down. But if you notice, there's not a lot of separation between these. So any one big bar, if we got one monster bar, you could see this start to turn to the upside and probably break through the moving average. And because these lines are close together and the way they're calculated, it wouldn't take much to get this blue line to turn to the upside. So any increase in volatility from here is likely to shift this to negative. So it's something to be aware of. All right, so I typically only have the RSI 5 on here, but I wanted to show what was going on, especially on the daily, well, on both time frames. First, on the weekly, we've had this divergence in place where we're trying to push higher, and RSI isn't really confirming. We're starting to get this to pull back. Now, ideally, the RSI signal that I give in my course is that I'm looking for the gray line, the RSI 5, to drop down under 50 while the RSI 20 in red stays above 50, all right? We haven't had that really since the low. It dropped, it took off like a rocket, and it hasn't really offered that signal yet. We've had numerous signals take place on the daily chart. You see how many times this has taken place from this low. We've had that exact same signal. RSI 20 is staying above 50. RSI 5 keeps dropping down under 50. That's this horizontal line here. All right. Notice what happened recently, though. We got a deep oversold reading while this stayed above. And that essentially happened during that big red bar. So it wasn't something like I'm ready to go diving in. But now if you notice, we actually tried to undercut that low of that bar. And this has made a higher low. So we're forming a little bit of a divergence. I think it's worthwhile noting. Now, we never really took out and broke out the low of that. And we still haven't taken out the high of this. We're still inside this one big red bar for about 5 days now. Right. So we need to get a little confirmation with a convincing move away, not just an early morning, nick it to the downside and then turn right up. We need to see some real strength, even on an hourly basis, have a closing bar below that level that's a little bit more definitive. Okay, let's switch over to the other 4 time frames. And also, if you're enjoying the content, hit that like button and also subscribe. It helps me with the growth of the channel. All right, so we've got this S&P up. I'm going to show the QQQ because I think there's a pretty significant difference. I would call it because it's a leader. It lost momentum a little quicker. I want to show why I think that's important. But we've got this same situation taking place on the monthly where we're up 4 or 5 months in a row, but we're really not showing any real signs of a reversal or anything like that, and not a lot of strong selling. Sellers are just not showing up. It makes sense that this pulls back a little bit. I mean, maybe comes down to the 5,000 mark or, possibly even under that level to test the support of the breakout. But we're going to need a little bit more convincing evidence, as I've been talking about here, certainly coming back down through that red bar. But I'm going to go into a little bit more detail when I get to the daily. On the weekly chart, we're forming these tails. Now, we do have one more day left. Obviously, we got to go through this morning or Friday and see how this plays out. But the reality is it just seems like there's underlying support on a pullback still. Now, it's not because there's a lot of buying strength. It's just the sellers are just not that strong. We did get a little pop in the sellers with this little DI move, but that was, so I've been watching this is the first time this year we've taken out a low of a bar right here. Okay. The problem is that was a narrow range inside bar. It was a holiday week, shortened week. So I'm looking for a little bit more evidence. And I know we nicked the low of this bar, but really haven't. It's not the type of reversal that we want to see to get a little bit more evidence that, yeah, we're going to come down and test the 18 week. So we are losing a little strength in the buyers, but not enough that it is a convincing turn. And the underlying momentum based on the ADX is very strong. So again, I've been saying this over and over again. Look, we don't want to get too bearish here. This is a daily problem. This is not a weekly problem. The weekly isn't really in bad shape. It's the daily. So the possibility is here we could come down, we could take out this low, we could roll this 18 for the first time, we could get these moving averages to crisscross, and we could form an opposing trend trigger, likely where MACD comes down to the 0 line and we get a low ADX pattern to develop. All right, so that would all be taking place at or near the rising 18 week. I mean, that's the possibility. Normally, when you get this kind of a run like this extended type of a run, you go through a longer consolidation phase. So it's not like I'm sitting back here with an order waiting, getting ready to buy on a pullback. It could very well take some time if that plays out. My point is that I think the underlying conditions on the weekly are a little too strong to expect a big nosedive. All right. So don't be thinking that that's the way this is going to play out. Now, if we look at the hourly chart, it's been pretty sloppy. It can't seem to garner any real strength on the sell side. We get these red pops, but you can't really get the ADX going to any significant degree. You can see the big red bar here and then a huge retracement. big gap down, and then we retrace back up and fill it, right? And keep doing the same thing over and over again. No real consistency to the selling strength. Now, I want to spend a minute or two going into this because I'm going to also look at a couple other indexes. So we've got this divergence that played out. Now, what I've talked to my subscribers about way back here was when RSI gave a divergence signal and then we went to a new high. From that point on, you pretty much divergence is broken and you don't really want to mess with divergence, right? I'm saying, look, don't worry about divergence. We're looking for a break in the trend. All right. Now, the problem is, and so this is all noise. It's all above the zero line. And it's just noise. It's making you think that something's happening when nothing's really happening. Now, I do make a distinction when 80x can't get above 25. So this is divergence. I ignore. But then when this happens, I don't really want to ever ignore that. All right. So once that took place late March, I've been on pins and needles a little bit, looking a lot more closely at what's taking place. And we're getting closer, but we can't get this moving average. This moving average just will not roll over. I mean, we got it flat, and then yesterday comes with a big green bar, not a big green bar, but an up bar, and we get the line moving up again. So we can't seem to get this thing to move down. Now, I think if we can take out the low of this, certainly on a closing basis, or break the 40, you're going to see this 18 finally roll over. But it's got to happen on a closing basis. You can't have these little nicks that come back or no follow through to the downside and then have an upside follow through the following day. I mean, for all intents and purposes, this is still all these bars are inside this one bar. So we're going to need something convincing to break, and it's probably going to take a break of the 40 even on a closing basis. So we want to see that roll over, that's for sure. But the longer this goes without doing that, so if we keep going sideways like this, this is going to work its way back down to zero, and this is going to turn into a low ADX condition. So we've been low for, it hasn't been long enough on the S&P. But if I switch over to the Qs, we've been low since the beginning of March. All right, it actually has come, and you can hold on a sec, let me draw this in. So we've got this kind of channel that has formed, and it's been it's 25 to 30 bars on the daily chart. So it does qualify as a low ADX condition now on the QQQ, and this is the leading index. And also notice how this has come down a lot closer to the zero line. I mean, it wouldn't surprise me at all if this could break out and actually start a new move to the upside. Now, to me, that's a little bit different than the climax play I was looking for. In a climax play, you don't typically go and create a low ADX condition. It tends to come down and then gets a pop before you have that condition in place of 25 to 30 bars. So that muddies the waters a little bit because this has gone on so long. We've got to do a little extra work. This could actually be a breakout where it has a little juice to it. It could follow through a little bit more. And I think that's pretty relevant right now. The volume pattern is getting a little bit better. Now, it hasn't broken out. It hasn't gotten up through that 450 level, and it hasn't even taken out the high of this big red bar. So, I mean, for all I know, we're going to turn again, come back down through this low and fail here and actually get these moving averages to turn to the downside. If we do that, then it's all systems go for some type of a consolidation or correction pattern. So, be on the lookout for that. But if it breaks out, I'm not necessarily looking for a climax that ends in a couple days or, a week out or something like that. So because it's gone on long enough, it could end up being a little bit more of a substantial move. If you look at the weekly Qs, you see how this is formed. 4, 5, 6 weeks consolidation going sideways. O'Neill calls this like 4 weeks tight, I think is what he calls it. I don't know the name of it, something like that, where we've just been really consolidating in a tight manner after a strong move to the upside. So yeah, we're losing some strength in the buyers, but the sellers are just not there. And as I've been saying for about a month or two, until we see selling strength, I wouldn't get overly concerned about what's taking place. Now, I do want to mention how gold and silver, I mean, look at what's going on with the gold chart. Look at this massive move to the upside. Now, there are some gold stocks that you can look at that are just breaking out right now. They're kind of gold plays, and actually every sector does this, where we play kind of a follow the leader type of a deal. And a lot of it starts with the biggest names, but in gold, it's been a little bit different. HMY was one of the first names out of the gates and broke out. It's actually a smaller name, but we're starting to see some of the other stocks, even the more substantial ones, sort of break out of their consolidation areas. So it's still worthy of looking at some of these stocks because they're pretty close to their breakout levels. But what I'm telling you is this is not something to take lightly. When we get a strong breakout and a turn like this on the monthly that kicks this in after this long of a move sideways, it's probably pretty important, all right? And I don't have the silver chart loaded, but I'm going to just pull this up really quick just so you can see. Look at the massive green bar on the monthly chart. I mean, this is just a huge move, the way this is breaking out here. So I think we have to respect what's going on in the a lot of it is commodity based. It's not just silver. It's not just gold. You can see copper breaking out. You can also see oil actually showing a lot of strength as well. So these are the kinds of things I'd be on the lookout for because I think they're close to their base. They're not buying an extended move in like some of the FANG stocks or something like that, chasing something. You're looking at something that's kind of emerging out of a base, which is what I'd prefer. All right, that's the update for the week. Let me know if you have any questions.